All right, as most of you know, I predicted that the stock market was going to crash. It was just stretched way too far above its long-term moving averages, and it had right translated the intermediate cycle way too far. So there was really no other um, path forward other than to crash. But I have to say, even I didn't expect a crash of this proportions. I was looking for a move back to test the 200-week moving average, which is about it comes in a little over 2,600, and we've gone through that. So this has even gone further than I expected. But this is not the end of the world. This is not the end of the secular bull market. This is uh, stretching the rubber band about as far to the downside as it can possibly go, and that is going to be the um, launching pad, the slingshot, I guess, so to speak, for the next phase of the bull market, which still has another 10 or 15 years to run. We're still early in this innovation cycle. We're basically getting kind of the same thing that we did in the 87 crash. That was very similar. The market got stretched way too far above the long-term moving averages. Um, an extreme right translated cycle caused the crash. And it looked like the end of the world when it was happening. But as we know now, that was the staging for the next phase of the bull market, and the bull market still had a long ways to go at that point. And the same thing applies here, where this is not the end of the secular bull market, um, and things will get back to normal. Um, Trying to call a bottom right now in a market where basically we've never seen anything like this before in history. This is a one-time event that there really isn't any historical precedent. But we are getting a reversal into the close here. I don't know if that's going to mark the bottom. I kind of tend to think we need a gap down open that then reverses into the close before we get a bottom. Um, but as I've said in previous videos, my expectation now anyway is that this will form, this ICL that we're in right now will form a final 4-year cycle low. We'll get a convincing bounce at some point here, and then we're probably going to have to test it, this low again if we assume 2 daily cycles to the next intermediate cycle, then that low would be due like in May or early June. So my expectation is a bounce that then has to roll over and retest this. But my expectation at this point is that that retest will be successful and will not break below this low. I will reserve the right to change my mind and reverse my position when we see how the next ICL begins to unfold. But as of right now, that's kind of what I'm expecting by what is happening here. I think this is just too severe at this point to then bounce and then undercut. I think this is going to turn out to be the final 4-year cycle low, wherever that bottom comes. I guess maybe as I'm speaking, the reversal's gaining some traction into the close. Maybe this could be the final bottom here. Again, I'm going to say that I think the odds are better if we gap down and reverse rather than sell off and reverse into the close, but we'll have to see. But we should be pretty close. We're 32 days into the daily cycle. They usually bottom anywhere from 30 to 40 days, 35 to 40 days, I'm sorry. But when you get a crash event like this, they can bottom a little early. So it's not impossible that this is going to mark the final bottom. But I think the odds would be better if we could gap down and then reverse.